Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. It's Sunday, February 8th. Here's your quick tour of crypto's 5 most interesting developments. Story 1. Bitcoin's difficulty reset. Overnight, the network's auto-tuning mechanism delivered an 11.16% negative difficulty adjustment, the biggest single downward move since the summer of 2021. What does that mean in plain English? Blocks were arriving too slowly as hash rate fell. Miners powered down amid price pressure and US winter curtailments, so the protocol made mining easier to steer block times back toward 10 minutes. Practically, hash price, revenue per unit of compute, gets a lift for miners who stayed online. The new difficulty level is around 125.86 trillion at block height 935,424. It's a pressure valve for miner margins, and often a signpost that forced selling can cool as profitability normalizes. Source: the block. Stay with the nuance here. A big difficulty cut doesn't magically reverse bearish sentiment, but it can slow miner capitulation, which in past cycles helped stabilize supply. If you track mining equities or power markets, this is the metric to watch this week. Story 2. Mainstream pushback gets louder. The Financial Times ran a sharp op-ed arguing Bitcoin is still about $69,000 too high, framing the asset's rebound and crash cycles as faith-driven rather than fundamentals-driven. Whether you agree or not, this matters because legacy finance sentiment shapes allocation committees and retail psyche, especially after a drawdown. The column spotlights the market's dependence on belief and critiques high-profile evangelists. Source: Financial Times. Story 3. Super Bowl Sunday through a crypto lens. In 2022, we had the Crypto Bowl. This year, crypto's presence is more subtle. Prediction markets are buzzing as users bet on which brands will air national spots, with Coinbase's regulated predictions platform showing millions in interest across Super Bowl ad markets. That's a sign that on-chain and exchange-hosted prediction tools have gone mainstream as entertainment companions. Meanwhile, the broader ad slate tilts heavily toward AI, with first-time AI entrants and incumbents chasing mass reach tonight. And here's the crypto crossover. AI.com, led by Chris Marsalek, the CEO of Crypto.com, is using the Super Bowl to launch consumer-facing autonomous agents, pitching a decentralized network of AI helpers that can execute tasks across apps. It's AI forward, but with crypto DNA in the executive chair. And it tees up a near-future narrative where AI agents and on-chain rails increasingly meet. Sources: Coinbase and CBS. Why this matters for tokens and infrastructure. Prediction markets are one of the cleaner, real-time demand signals for crypto utility. And AI plus crypto remains a recurring theme for capital, thanks to programmable money, agent wallets, and permissioned automation use cases. Tonight's game is a stress test for mainstream curiosity. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Story 4. Real-world assets, but make it yachting. A project called Investing Yachts is unveiling a tokenized yacht charter model today. Its Yacht token is designed to share a portion of net charter profits with holders who lock into vaults, includes a buyback and burn policy from profits, and uses new issuance tied to asset acquisition. It's early, very press release stage, and investor diligence absolutely applies. But it's another data point in RWA's march beyond bonds and invoices into niche, cash-flowing assets. The angle to watch is less that yachts are coming on-chain, and more that SMB-style operating cash flows are seeking token markets for capital formation. If we keep seeing frameworks like NAV-based issuance and audited revenue splits, the RWA stack gets incrementally more mature. Source: The Block, press release. Story 5. Eyes on Asia, consensus. Hong Kong kicks off February 10 through 12, returning with a heavy institutional and policy slate that bridges East-West dialogues on tokenization, stablecoins, and AI-driven crypto infrastructure. With markets wobbling and regulators from the UK to Japan actively consulting on stablecoin reserves and market rules, expect headlines to center on bank-grade settlement rails, tokenized funds, and DeFi meets compliance. If you're tracking deal flow and sentiment recovery, this is the first big tentpole of the year in APAC. Source: CoinDesk. Quick pulse check before we wrap. Miners just got serious relief from the difficulty cut. Legacy media skepticism is peaking again. Super Bowl attention has shifted from lavish crypto ads to prediction markets and AI launches with crypto roots. RWA experimentation keeps diversifying, and Asia's biggest crypto week is about to start. If you're positioning for the days ahead, watch miner selling, hash price, and any policy soundbites out of Hong Kong that move the tokenization and stablecoin narratives. That's your 6-minute speed run for February 8th. Thanks for listening and see you tomorrow.